Interest rates have been a key driver of the housing market over the last few years, but over the last 2 weeks, we've seen interest rates surge to their highest levels since 2019, with interest rates sitting somewhere around 4% for most qualified buyers out there. But it hasn't had the impact on housing like a lot of people thought it would. So in today's video, we're going to talk about what's actually happening in the housing market with higher interest rates. What's it doing to home prices? Is buyer demand slumping or is it picking up? And we're going to talk about what we're likely to see over the next couple of months. And we're also going to talk about some fee adjustments that are coming to interest rates. Now, this might be something that you don't truly understand, but we're going to break it down in terms that you can understand, because there's some fees that are going to happen when you're not putting at least 40% down when purchasing a home, and they might affect your interest rate, and no one's talking about it. In addition to that, we're going to talk about the idea of locking your interest rate now versus waiting. There's people out there wondering whether they should lock their interest rate now or wait for lower rates in the future. So in today's video, we're going to dive into all of that, help you understand exactly what's going on so that you can make informed decisions. My name is Jeb Smith. I'm a real estate broker here in Southern California. My channel is all about real estate, guiding you through that real estate process. So do me a favor, if you find any value at all, hit that thumbs up, and please feel free to subscribe if you want to stay updated on everything real estate related. So over the last couple of weeks, we've seen interest rates rise to the highest levels we've seen since 2019, which is putting affordability in question for a lot of home buyers out there. But at the same time, we've seen demand actually pick up. Home sales in January were higher than expected. In fact, I've been out showing property, in every single open house I've been in has been absolutely packed. Every offer I've written for a buyer, there's been multiple offers. Why is that? There's a fear out there of higher interest rates and higher home prices to come, and buyers are trying to beat that. They're trying to get in before rates continue to rise and home prices continue to rise at the same time. So they're flustered. They're doing things like making offers above the asking price, waiving contingencies, doing all sorts of things to try to beat the competition out there. And quite frankly, it's a little bit scary. I'm seeing homes sell way above where I thought they would sell, and that's raising some concern for me. And we're going to talk about that a little bit more in today's video as well. So the question is, why are home prices continuing to rise even with interest rates going up? Well, we talked about buyer demand, but what we haven't talked about is the lack of available inventory out there. We ended January at some of the lowest levels in inventory that we've seen on record in quite some time. Nationwide, we had somewhere around 1.6 months of supply of available inventory for most markets out there. Now remember, all real estate's local. Your market might be a little bit different. For the competitive markets out there though, the markets that did really well last year, those markets are seeing similar competition this year because of the lack of supply. And with the fear of rising interest rates, buyers are trying to get in and beat that higher monthly payment, that potential, higher housing price because of appreciation over the last couple of months. And that is causing home prices to continue to soar. And at the same time, you have rising rents in a lot of markets out there. 23% in Austin, up to 38% in Naples. So the fear of rising rents, the fear of inflation makes people want to put their money in a fixed asset like real estate. Real estate is the best hedge against inflation because you keep your payment fixed during a time where prices are continuing to rise. And that is another reason that competition is fierce out there. Not only do you have the move-up buyers, the move-down buyers, the first-time home buyers, you've got those that have been renting for some time that maybe owned a house, at some point in the past, that are now looking to get back into real estate. And also you have some of those that have never owned a home, the first-time home buyers looking to do that. And that's adding to the competition that's in a market with low supply. Now, earlier in the video, I mentioned, having some concern about rising rates and rising home prices. And it's becoming more and more real every single day. Every time I put an offer in for a buyer, or every time I have a listing and I see the offers come in, and I see what the competition's doing out there, it starts to worry me a bit because we saw 18, 19% appreciation last year In a lot of markets out there, some markets saw more appreciation than that. This year, we've already seen 5, 6, 7% appreciation in a lot of cities out there across Orange County where I'm located. I've seen homes priced at 1.6 million sell for 2.1 million. I just had a condo in Irvine listed for 850,000 that sold for 1.1 million. That's nearly a $250,000 gain on that property in just a short period of time. The buyers bought that property back in 2020 for $735,000. That's nearly a 35% return in just under 2 years. So how long can this continue? In fact, the Orange County Register, our local newspaper here in Orange County, California, recently put out an article that says that home buyer costs have risen nearly 26% in just a year. Because a year ago, home prices were lower, interest rates were lower, and since then, we've seen the median home price rise considerably. We've seen interest rates go up. In fact, when they did that article, they weren't even using the current interest rate of nearly 4%. They were using an interest rate about 0.25% lower. So with the updated interest rate of nearly 4%, we're really starting to push affordability for a lot of potential home buyers out there. Now I want to do something I don't normally do. I want to ask you what you think about interest rates. Are they affecting your affordability? Are you full steam ahead? What's going on right now with interest rates and your ability to purchase? Do me a favor, leave it in the comments below. I want to know exactly what's going on, how it's affecting people, so that I have a better idea in making these videos to help more people. But at the moment, things are continuing to move very, very strong, which makes it even more difficult for home buyers out there to make rational decisions in a market where people are doing irrational things. Now, I do want to go on the record and say that I don't think this is a crash coming. I don't think you're going to see a huge pullback in prices, but I do think we're starting to reach that level where things have to moderate. Right? If you've heard me talk in videos before, my concern for this year was having appreciation like we saw last year. I didn't think we could see it. I didn't think it was even possible, but yet we're following pretty closely to what we saw in the spring of last year, and we haven't even gotten into the spring market yet. And that raises concern for me because you're starting to get to a point where it makes it difficult for first-time home buyers. And without first-time home buyers, you don't have the sequence of events that need to happen for the move-up buyers to buy their next property, right? If there is a buyer out there that wants to purchase something more expensive, they likely need someone to buy their home. And typically, it's a first-time home buyer, right? The first-time home buyer moves into that move-up buyer's home. That move-up buyer buys a more expensive home. That more expensive buyer then buys maybe a luxury home or maybe their forever home. And without the first-time home buyer, that sequence of events can't happen, which to me starts to raise some concern, at least here locally. In addition to that, as of April 1st, you have fees that are going to be added to your interest rate when you put less than 40% down and you're doing a high balance conforming loan. Now, for many people across the United States, this isn't a concern. But here in Southern California, if you have a loan amount above $647,200, that's considered a high balance conforming loan. And when you purchase a property and you put less than 40% down, you're going to get hit with a fee adjustment to your interest rate. Now, what does that mean? It means that you're going to have a hit to your interest rate for putting less than 40% down. Now, I don't want to get into all the numbers here because it might be a little bit difficult to understand, but we're talking about 1/8 to potentially 1/4%, depending on how much you put down. It's going to be closer to 1/4% when you put less than 25% down, and between 25 and 40% down, it's probably going to be somewhere around 1/8%. Now, that might not sound like a lot, but when you're talking interest rates at 4%, now goes to 4.25% at a time when we've already seen monthly payments rise considerably over the last couple of weeks, that really starts to play in to the affordability and what home buyers are able to do in this crazy housing market. Now, with that said, I am one of those that believe, and I've said this many times on video, that I do think we've kind of reached the peak in where interest rates are going to go, at least short term. I think once the Fed does raise the Fed funds rate and does what they say they're going to do, I think you'll see the markets calm a little bit, right? There's a lot of volatility in the market. The Fed hasn't been quite as hawkish as a lot of people have wanted to see, and they're kind of curious to see what the Fed is going to do. Are they going to let their balance sheet run off? Are they going to raise 8 times this year? Are they going to raise 3 times this year? What are they going to do? And I think once you start to see what the Fed's going to do, the volatility backs off a little bit, which gives interest rates a little bit time to breathe. But until then, we don't know what interest rates are going to do, right? I think personally speaking, you're going to see interest rates kind of bounce around a little bit around this 4% number for the short term. So if you're considering locking a rate, we get this question all the time. Should I lock my interest rate now or should I let it float? Maybe you're in new construction and your home isn't going to be built for a couple of months. Should you lock your rate now? My answer is yes. I think you should lock your rate now for some security. If you're comfortable with the payment now, why take a risk and let it change, right? Especially if you're a couple of months out. Lock the rate now, and as you get closer to that date, maybe you can start to shop it, maybe with other lenders. Maybe the lender that you've locked it with has a potential float down option that allows you to, the rate to go lower if interest rates are lower at that time, but you have the security of knowing it's locked in. I don't like to tell people to shop, lenders once they're already in process. But if interest rates drop considerably between now and then, it might be worth a call to a lender to restart the process if that current lender won't lower your rate for whatever reason. So just make sure you're, looking at all your options. But I think in a market with a lot of volatility, which is what we're seeing right now, you've got, things happening overseas with regards to potential, Ukraine-Russia issues and what have you, that might affect interest rates. Potentially in a good way, but at the same time, it could be a negative impact as well. We just don't know how all of these things are going to play out. So just make sure you're making the right decision for yourself, and if you're comfortable with it now, just lock it and move on. But if you're still watching this and wondering what happens to interest rate when the Fed does start to raise the Fed funds rate, historically speaking, do me a favor, check out this video. I dive into it in more detail going back 4 decades. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope you have a great day. Bye-bye.